What exactly is a business unit in Oracle Fusion? It sounds like a simple question, but the moment we say business unit, several different pictures appear in our minds. Is a business unit a legal entity? Is it a branch? Is it a warehouse? Is it a department such as procurement? Or is it a business division such as B2B and B2C? And here is another common question. If we create a business unit, will Oracle automatically generate a trial balance for it, a balance sheet, a profit and loss statement? Not exactly. So instead of beginning with a textbook definition, let us follow one ordinary business transaction and observe what Oracle is doing. Let us begin with the procure to pay folder and move through it slowly. Imagine that our company needs 10 laptops. Alex raises purchase requisition PR-10021 for 18,500. Look at the document carefully. Oracle stamps the requisitioning business unit on the requisition. This identifies the business unit that raised the requirement. The approved requisition is converted into purchase order PO-10234 and sent to Blue Peak Trading. Here, Oracle captures the procurement business unit, the BU, responsible for purchasing and issuing the purchase order. The supplier delivers the laptops. The warehouse records goods receipt RCV-20445 against the purchase order. The receipt carries the receiving business unit, identifying the BU that received the goods. Next, Bluepeak submits supplier invoice INV-2481. The invoice is matched and validated for 18,500 under the Payables Invoicing Business Unit. Finally, payment PAY-7781 is processed through the Payables Payment or Payments Business Unit. So even within one purchase cycle, the BU shown on each document can describe a different business responsibility. Who requested, who purchased, who received, who processed the invoice, and who made the payment. Now look briefly at the order to cash folder. The flow moves from sales order to shipment to AR invoice and finally to customer receipt. We do not need to examine every document separately here. The important observation is that every O2C transaction also carries the relevant BU stamp. Notice the pattern. Whether it is a requisition, purchase order, receipt, supplier invoice, payment, sales order, shipment, customer invoice, or customer receipt, the business unit travels with the transaction. But what does BU1 actually represent? Here is the key idea. A business unit is like an empty configurable container. When we first create BU1, BU2, and BU3, their names alone do not tell Oracle what they are supposed to do. We give each container a purpose by enabling business functions. Oracle offers functions such as requisitioning, procurement, receiving, payables invoicing, payables payment, sales, billing and revenue management, customer payments, and collections management. Think of these functions as capabilities. An empty BU is simply an organizational structure. Once we assign capabilities, its business meaning begins to appear. Let us build BU1. First, we assign the sales function, then billing and revenue management, then customer payments. BU1 can now accept a sales order, create an AR invoice, and record a customer receipt. It sells, bills, and collects. If one physical branch independently performs those activities, we may decide to call BU1 a branch business unit. But please notice the direction of the logic. BU1 did not become a branch simply because it was called a business unit. We first examined how the branch operates, assigned the required functions, and then used the label branch BU to describe that design. Now consider BU2. We assign only the procurement function. BU2 may not represent a shop, warehouse, or branch at all. It can represent a central procurement team that negotiates with suppliers and creates purchase orders on behalf of several operating branches. BU2 is therefore a shared procurement business unit. Then consider BU3. Suppose the organization has a head office or even a legal entity that operates without separate branch BUs. We can enable requisitioning, procurement, receiving, payables invoicing, payables payment, customer payments, and collections management. The same configurable structure now represents something very different. This is why two business units can look identical in the setup screen but mean completely different things in the business. Their meaning comes from the operating model and the functions they perform. Now let us repeat the branch pattern. We have branch ABU, branch BBU, and branch CBU. Each branch creates its own customer transactions. AR-1001 is stamped with branch ABU. AR-1002 is stamped with branch BBU. AR-1004 is stamped with branch CBU. Customer receipts carry the same business unit identity. This BU stamp is extremely useful. It tells Oracle which operational part of the enterprise owns each transaction. And once Oracle knows the BU, we can control which users are allowed to work with those transactions. Let us test that with Alex. On the screen, Alex initially has no module access and no business unit access. Therefore, Alex cannot see any transactions. First, let us give Alex only receivables module access, but no business unit access yet. Watch what happens. The receivables container becomes active because Alex now has permission to perform receivables activities. But the container is still empty. Alex cannot see the AR invoices or customer receipts of branch A, branch B, or branch C. Module access has told Oracle what Alex may do, but Oracle still does not know for which business unit Alex may see or process data. Now select branch ABU under business unit access. This is the moment the transaction data becomes visible. Alex can now see branch A AR invoices and branch A customer receipts. Branch B and branch C transactions remain unavailable because Alex has not received data access to those business units. So module access alone activates the functional area, but it does not automatically provide access to any branch data. The combination becomes complete only after the relevant business unit data access is assigned. This gives us a simple formula. Module access tells us what Alex can do. Business unit access tells us where Alex can do it. What plus where gives Alex access to the relevant transactions. Now change the module from receivables to payables while keeping branch ABU access. Alex no longer sees the receivables transactions. Alex can now access branch A supplier invoices and payments because the module has changed, but the business unit boundary remains branch A. Suppose Alex needs to work for both branch A and branch B. We can grant access to both business units. If Alex later joins a central processing team, we may grant access to all three BUs while still limiting Alex to the required module. This simulator is a conceptual explanation. In the real Oracle environment, security is implemented through job roles, duty roles, privileges, and data access assignments. But the business idea remains simple. The role controls what a user can do, and BU data access controls the business unit transactions on which the user can perform that work. Now let us challenge one more assumption. Does every business unit have to be a branch? Imagine branch A, branch B, and branch C. Each branch identifies what it needs and raises its own requisition. Branch A raises REQ-A01, branch B raises REQ-B01, branch C raises REQ-C01. One design is fully decentralized. Branch A performs procurement for branch A, branch B performs procurement for branch B, and branch C performs procurement for branch C. Each branch raises the requirement, creates its own purchase order, and receives its own goods. But perhaps the company wants stronger supplier negotiation, common pricing, and a smaller purchasing team. In that case, the branches retain the requisitioning function while BU2 receives the procurement function. The three requisitions now converge into one shared procurement BU. BU2 buys for all three branches. After purchasing is completed, the physical goods still go to their intended destinations. Branch A records GRN-A01, Branch B records GRN-B01, Branch C records GRN-C01. So the process is distributed by function. The branches identify the demand and receive the goods. The shared procurement BU performs the purchasing activity in the middle. Let us now zoom out from the branches and look at the full enterprise structure. On the screen, Ledger A contains Legal Entity 1 and Legal Entity 2. Legal Entity 1 has Branch A BU and Branch B BU. Legal Entity 2 is home to Operations BU and the two shared service business units, Payments BU and Procurement BU. Ledger B contains Legal Entity 3 and Branch C BU. This picture teaches us four important relationships. First, one legal entity can be associated with multiple business units. Legal Entity 1 supports both Branch ABU and Branch BBU. Therefore, one legal entity does not mean one business unit. Second, a shared service BU can process transactions on behalf of clients connected to different legal entities. The service provider and the client do not have to be the same BU, and the business unit is not another name for the legal entity. Third, the payments shared service relationship stays within the same primary ledger. The blue dotted lines connect payments BU with its client BUs inside ledger A. In Oracle terminology, the service provider performs the payables payment function for client BUs that perform payables invoicing. We may casually call them client BUs, but the precise functional relationship is between the payables payment BU and the payables invoicing BUs it serves. Fourth, procurement can cross the ledger boundary. The procurement BU in ledger A can serve a requisitioning BU belonging to legal entity 3 in ledger B. That is why the red procurement line crosses from ledger A into ledger B and reaches branch CBU. The document flow makes the distinction easier to remember. A branch or client BU raises the purchase requisition. The shared procurement BU converts the requirement into a purchase order. Now we are ready for the definition. A business unit is a logical or organizational part of the enterprise that performs one or more business functions. It can represent a branch, it can represent a business area, it can represent a shared procurement team, a centralized processing team, a head office, or a business division. In some designs, one BU may closely resemble a legal entity, but that does not mean BU and legal entity are the same concept. So, BU equals branch? Not necessarily. BU equals country? Not necessarily. BU equals legal entity? Not necessarily. BU equals warehouse? Not necessarily. BU equals department? Again, not necessarily. BU is an organizational design choice. First, understand how the business operates. Second, decide which business functions each organizational part must perform. Third, design the business units, enable the functions, and grant the appropriate data access. Oracle will then stamp the BU on transactions and use it as an important operational and security dimension. Now let us return to the opening accounting question. Does creating a BU automatically generate a trial balance, balance sheet, or profit and loss statement? No, not automatically. Accounting reports are generated from the chart of accounts code combination. For example, the account combination may contain company O1, profit center PC10, cost center CC500, account 41000, and intercompany 000. The company segment can be used to identify the balancing entity for trial balance and balance sheet reporting. Profit center and cost center segments can support management and profit and loss reporting. The exact reporting design depends on the chart of accounts and accounting configuration. The BU itself is not automatically a reporting segment. However, the BU can influence accounting because Oracle can use transaction context and configuration to default or derive segment values. In that way, a BU can shape the accounting without itself becoming the source of every financial statement. Let us finish with 5 points. 1. Oracle associates business units with many business transactions, including requisitions, purchase orders, receipts, supplier invoices, payments, sales orders, AR invoices, and customer receipts. 2. A business unit performs one or more business functions. Those functions give the BU its operational meaning. 3. A BU can represent a physical operating area, such as a branch, or a logical structure, such as shared procurement, centralized payments, or head office processing. 4. BU access helps restrict users to transactions belonging to selected business units. Remember Alex, module access determined what he could do, while BU access determined where he could do it. 5. Do not begin the enterprise design discussion by asking, what should we name the BU? Begin by asking, how does this part of the organization operate? Which transactions should it own? Which business functions should it perform? And who should have access to it? That question leads to a much stronger design. A business unit is not automatically a location, branch, company, warehouse, or department. It is a flexible organizational design choice that tells Oracle which part of the enterprise performs which business activity. Once you understand that sentence, business unit stops being another confusing Oracle setup term. It becomes a practical tool for designing transaction ownership, shared services, and user access across the enterprise.